In the world of SME IPOs, everyone's hunting for that next hidden gem. Today, we're cracking open the books on Avana Electrosystems. So the big question we've got to ask is this a future powerhouse set to wire up India's growth, or is it a high-risk gamble built on a foundation that's, well, a little shaky? Let's dig into the documents and see what's really going on. All right, here's how we're going to break this down. First, we'll get a handle on what this company is all about. Then, we're going to follow the money. And let me tell you, the numbers tell a very curious story. After that, we'll play detective and hunt for those red flags buried deep in the fine print. We'll size them up against the competition, and then, at the end, we'll deliver a clear, no-nonsense verdict. So first things first, what does Avana Electrosystems actually do? Well, they operate in a really critical but often invisible part of India's power grid. The part that actually keeps the lights on and stops things from blowing up. Think about it like this. Our power grid needs a brain and a nervous system to work safely, right? Well, that's what Avana builds. They design and manufacture these control panels and relays that act as the protectors and traffic cops for electricity. They don't sell to you and me. They sell these critical systems directly to big engineering firms and power companies, making them a pure B2B or business-to-business play. Now, this is where things get really interesting. Take a look at this map. While it looks like they have a presence across the country, the reality is their business is incredibly concentrated. The prospectus tells us that last year, over 55%, more than half, of their entire revenue came from just two states, Madhya Pradesh and Maharashtra. This isn't just a fun fact. It's a huge concentration risk. If projects slow down in just those two areas, their whole business could take a major hit. Okay, so now let's talk about the money. And this is where the story takes a sharp turn. At first glance, the numbers look pretty great, but they're hiding a really crucial plot twist. Just look at this chart. It tells you everything you need to know. See that leap from fiscal 23 to 24? Revenue just explodes. We're talking over 86% growth. That's incredible. But then, look at the very next bar, fiscal 25. The growth slams on the brakes and drops to just 16%. Let's be really clear here. This is not a high-growth company coming to the market. This is a company whose growth has fallen off a cliff right before asking you for your money. And this brings us to the one question every single investor should be asking. What on earth happened? How does a company growing at nearly 90% suddenly hit a brick wall? And you know what the prospectus says about it? Nothing. Crickets. That silence is what forces us to put on our detective hats and start looking in the fine print, where the real stories are always hiding. And when you start digging, you find some things that should make you, well, pretty uncomfortable. This is the part of the analysis where we read what most people skip, because that's where you find out what's really going on. So what's hiding in there? Well, first, that massive revenue slowdown we just saw. Second, a staggering 82% of their revenue comes from private contractors. That means if just one or two big clients decide to leave or pay late, Avana is in a world of trouble. But the third point, this is the real kicker. The document is missing crucial data. We see the revenue, sure, but there's no clear picture of their profits, their cash flow, or their total debt. It's like they're asking you to buy a car, but they won't let you look under the hood. This right here is the single biggest red flag in the entire document. I want you to read this quote. It's pulled directly from their legal filing. Let me say it again. The objects of the offer have not been appraised by any bank or financial institution. Just let that sink in. They want to raise money for a huge expansion, but their cost estimates and the entire project plan have not been checked by any independent bank or expert. You're being asked to fund a plan based entirely on what management says it will cost. That's not an investment. That's a leap of faith. Okay, so with all of these massive warning signs flashing, let's try to get some perspective. How does Avana even look when we put it side by side with its competitors who are already on the stock market? This table really says it all, doesn't it? Avana is sitting at around 61 crores in revenue. Now look at their competitor, Danish Power. It's almost 7 times bigger. But here's the knockout punch. Danish Power is also growing much faster, at over 28%, compared to Avana's 16%. So not only is Avana the smaller company, it's the slower growing one too. That really doesn't look good. Now, we don't have the final IPO price just yet, so we can't do the exact math. But honestly, at this point, does it even matter?
A company with stalling growth, a completely unvetted expansion plan, and missing financial data simply has no business asking for a premium price. If this thing comes to market with an aggressive valuation, it's not a red flag. It's a giant flashing neon sign telling you to run away.
So let's pull all of this together. We've dissected the business, the numbers, the risks, the competition. What's the final actionable verdict here? Who should actually be looking at this? All right, let's be brutally honest. Who should consider this IPO? I'll tell you. It's for one type of person and one type only. The super high-risk, aggressive investor who is totally comfortable betting on a project with huge unknowns and is willing to look past massive holes in the financial story. For everybody else, and I mean safe investors, conservative investors, moderate investors, the answer is simple. Stay away. The number of red flags and the lack of transparency create a risk profile that is just totally unsuitable for most people. So our final verdict in one single line is this: avoid. The fundamentals are just too weak and the red flags are too big to ignore. So let's sum it all up. Let's be crystal clear on what you'd be buying into here. This is not a story about high growth. It's a story about a company whose growth has hit a wall. You're being asked to fund an expansion plan that no independent expert has signed off on. And most importantly, you're being asked to give them your money without them giving you the full picture of their own financial health. Look, investing is all about taking smart, calculated risks. This feels less like a calculated risk and more like a blind gamble. And that's a game you just don't have to play.